Term life insurance may be an effective way to begin a personal life insurance portfolio. This product allows consumers to ensure their full and complete human life value, which is an essential element of achieving overall financial balance. Term life insurance is designed to protect your todays. It's temporary coverage, providing protection against the possibility of an unexpected death. However, when using this type of life insurance as part of a term and invest the difference wealth-building strategy, all factors and costs must be considered.
Let's talk about term life insurance and how it represents a major roadblock towards your wealth-building objectives. It's more common to think of term life insurance being cheap, but term insurance that you pay for an extended period of time and then drop it and continue to live can cost millions of dollars. Let's look at the three costs associated with term life insurance. The first is the premiums that you actually pay out of your pocket. If you don't die, those premiums are gone from your financial picture and reside at the insurance company. The second cost is the use of money that you lose out on and miss out on by having paid those same premiums. So it's not just the premiums you pay, it's the use of money that you also lose by having paid those premiums to begin with. Now, the likelihood of a death claim being paid in the first 10 to 20 years of any life insurance policy is very remote. For a male 40 years old, over a 25-year period, there's greater than a 96% likelihood that that person will reach age 65. And what that means is that there's a 96% likelihood that all premiums will be lost. And when that happens, when that loss occurs, not only are the premiums gone, but the investment opportunity on those premiums are also missed. The most significant and devastating impact of term life insurance ownership is the loss of the death benefit itself. When a death benefit that's been part of your financial picture disappears in one day, I think it sets up the worst day in your financial life. $500,000, $1 million, $5 million of life insurance, of capital in a room with your family's name on it. Poof, gone. In no way does that add up to a successful financial day. The real reason that this actually happens far too often is that people have been taught that they'll no longer need life insurance at some point in time in the future. Financial professionals teach us on TV that when the kids are grown and you get to retirement, you can drop your life insurance protection because you'll no longer need it. The fact of the matter is that the best time to own life insurance is while you're retired. The number one phase of your life where you would benefit the most from having life insurance protection is while you're retired. It might be that you've never heard that. The living balance sheet experience, working with a living balance sheet professional, exposes you to this uncommon way of thinking about life insurance. The presence of life insurance while retired allows you to have an improved level of access and enjoyment to your other wealth. If you know that when you die, your spouse, your children, your grandchildren, benevolent causes that are important to you are all taken care of and satisfied through the miracle of a life insurance claim being paid, you can then turn to your other wealth, your savings, your investments, your 401k portfolios, and you can spend all of that money, principal and interest. You no longer have to live the life of a hoarder. You can enjoy and improve cash flow on the money that you arrive at retirement with. The presence of life insurance while retired can increase your retirement income as much as 40% per year, every year of your retirement life. By working with a living balance sheet professional, this reality can become known by you. It basically comes down to allowing you to be the primary beneficiary of your own life insurance. If that were true, how would that change your attitude towards the life insurance that you own or that you should own? Term life insurance has a cost. If you live a long life, term insurance will have long since disappeared and will have left you to bear the cost of premiums, lost opportunity on those premiums, and in the absence of a death benefit that's part of your financial picture, you'll have limited availability and access to your nest egg as you retire.